Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you one simple trick that can be used with LEAPS option in order to make it near impossible for you to lose that trade. In addition to that, I'm going to show you how to use this LEAPS option in order to make consistent income. And lastly, I will show you how to use these option strategies, especially if you're trading with a small account portfolio. Now, if this interests you, or you're new to options and you're trying to use options to get additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be doing a couple option strategies, but most importantly, I'm going to show you one simple trick that I have implemented myself that makes it almost impossible for me to lose on my LEAPS option. So this video is going to be threefold. I'm going to start off by showing you the LEAPS option. Then I'm going to show you the simple trick in order to make sure you never lose. And lastly, I'm going to show you how to make consistent income with this LEAPS option. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. That being said, our stock for today is going to be none other than United Health, and that ticker is UNH. So let's go ahead and go into trade UNH options down to the bottom here. Okay, now that we have the options chain open, now would be a good time to ask you guys to do yourself a favor. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy before entering any options trade. That way, if the trade do go against you, then at least you know how to get out of the trade. Today's video is going to encompass an exit strategy as well. Now, for those of you guys new to the channel, I go ahead and make these free options video in order for people that are just new to the options market or trying to use a small account portfolio to make options so they could get different trade ideas. Just remember, this is not financial advice. Now, if you guys haven't already, now would be the perfect time to go ahead, like the video, subscribe to the channel for more videos of this nature, and make sure to hit that notification bell. Now, let's go ahead and get down to it. So, a LEAPS option is a simple acronym that stands for Long-Term Equity Anticipation Securities. It is a mouthful, hence we use the acronym LEAPS. Here's a fun fact. If you have one, it's a LEAPS option. If you have two contracts, it's still a LEAPS option. Good. In order for you to pick up a LEAPS in your portfolio, you're going to go ahead to buy. You're going to go ahead to call, then you're going to go and choose your expiration date. Your expiration date is the most important criteria that make this option strategy a LEAPS option. So let's go ahead and select that. For today's video, I'm going to be using the expiration date of July 17th, 2026. Now that's going to give me 358 days to expiration. Now, ideally, a LEAPS option is any option that goes out a year or more. So 358 is close enough to 365 days. So we're going to consider this a LEAPS option. Let's go ahead and get that selected. Now, before I go ahead and show you the strike price I'm going to choose, you got to ask yourself, why would someone want to use a LEAPS option? It's quite simple. If you're trading with a small account portfolio, you're limited by capital. Now, I grew a small account portfolio from $300 to $14,000 within 6 months. So I know it can be done, but it's extremely difficult to get done. You need to learn some different options tricks. This is one option trick that's going to be in this video that I use in order to grow my account exponentially. So if you had to buy UNH right now, United Health, and you want to do options, you would have to acquire 100 shares or more. In order to purchase 100 shares of UNH right now, it's going to cost you $279 per share. So essentially, you will have to come up with $27,900 in order for you to own 100 shares of the stock. Now, this option strategy that I'm about to show you right now is going to show you how to control 100 shares, but for way cheaper. So now we have the buy, we have the call, and we have chosen our year out expiration date. We're going to go ahead and choose our strike price. In order for the strike price to work, in order for this trade to work and be high in your favor, the most important thing to do is go ahead and choose your strike price below the current share price. So if I were to do this today, I would be going with the $260 price right here. And that is going to cost you, because it's a buy call, it's going to cost you around $57.90. Remember, this is what I would be doing if I were to do this today. However, I do already have LEAPS option on United Health. And I also think that this price right here, which is going to be $5,790 to pick up this LEAPS option, I think it's still a bit expensive. So what I would do, and this is where it comes into, you need to do your own research. I'm going to go ahead, I'm going to purchase the LEAPS option at a $300 strike price. So with the LEAPS option, you could go ahead and buy your strike price above the current share price or below the current share price. Always make sure to do what works for you. I have been trading United Health for a while now, so I know the 300 strike price is a very good strike price. And the price you're going to pay is going to be way cheaper. The price you're going to pay is going to be $39.40 in Options World. When you translate that to the real world, that's going to be $3,940. That's a huge difference between $3,940 and your $5,790. So hence, I'll be going with the $300 strike price and pay almost $4,000 for this LEAPS option. Now, that is how you pick up a LEAPS option. Once again, a LEAPS option is a buy call, or what we call the Options World, a long call that extends a year and beyond. Now that you have a LEAPS option in your portfolio, now that gives you a controlling interest. Remember, you do not own, but you're able to control 100 shares of the stock in your portfolio. And once you're able to own 100 shares of your portfolio, then you could go ahead and do regular option strategies as if you actually own 100 shares. So what I'm going to go ahead and do now, I'm going to show you a little trick that I've added in order to make sure I never lose with these LEAPS option. So let's go ahead and we're going to switch up the strategy right now. So let's go to sell. We're going to maintain call. And now we're going to change our strike date. The strike date I'm going to be using is going to be August 22nd. And that's going to give us 29 days to expiration. Essentially, what I'm doing is what's going to be known as monthly expirations. So August 22nd, 29 days gives us almost 30 days to expiration. So that's the closest to monthly that there is. Now that I have this there, now I'm going to go ahead and choose my strike price. This option strategy is going to allow you to make consistent income. So here's the trick I use. Before I get into any LEAPS option, I would go ahead and find out what the price of the LEAPS is. As we just demonstrated, the price of the LEAPS is $3,940. Now I'm going to go determine my strike price. If you are new to option, it's highly advisable to start off with an 80% chance. You could go ahead and choose your strike price just based on that. So I would go with the 310 strike price. And that's going to be paying me $4.80. $4.80 in the real world is going to be $480. Now, here's the trick. You simply multiply your premium, which is $480, and you're going to go ahead and you're going to multiply that by 12 months. You should be able to do at least 11 months of trading with this LEAPS option in your portfolio. And if you do it by 12 months, that should give you around $5,760. The point I'm trying to make here is that before going ahead and select your sell calls, check out the premium you're getting. Multiply your premium by 11 months or 12 months to see the total income you could get back. If that total income equals to or goes past the amount you paid for the LEAPS option, then and only then would I decide to get into that particular option contract. Now, in this case, I'm not going to go with the 310 because I'm an extremely conservative investor. What I'm going to do is that I'm going to go up. I'm going to go with the 330 strike price. Now, the 330 strike price gives me an even higher chance of profitability, and that chance of profitability is 88.8%, which is almost a 90% chance of profit. That means there's a 90% chance that this trade is going to go in my favor. But with a 90% chance of you winning the trade, there's also a 10% chance that this trade goes against you. Now, this new option strategy of selling a call on a monthly basis using your LEAPS option as collateral is known together as a PMCC or Poor Man's Covered Call. Once you go ahead and sell a call, that's going to be known as the covered call. The LEAPS option in your portfolio is going to be a LEAPS option. Once you add the LEAPS option and the covered call option strategy together, that creates a new option strategy, which is going to be the PMCC, or poor man's covered call. Now, when you go ahead and you multiply this amount here, which is going to be $325 premium on a monthly basis, and this is almost guaranteed because the price is going to be a 90% chance of profit. And whenever you go ahead and you win the trade, the next month you go ahead and buy it based on what the market is giving you. Feel free to increase your price or reduce your price. Just always make sure to keep a chance of profitability that works for you and your personal goals for your portfolio. Now I'm going to go ahead, I'm going to multiply the 325 by 12, and that's going to give me exactly $3,900. The amount we paid for the LEAPS option is $3,940. So if come expiration date, the LEAPS option expires worthless and I lose the amount of money I paid to acquire the LEAPS, that's going to be $3,940. However, if I'm able to do this covered call for 12 months, I would receive $3,900. The only amount I will be losing is going to be just $40. Now, I can definitely live with losing just $40 alone, purchasing a LEAPS option and doing the PMCC on it. So make sure you do your own due diligence before doing these option strategies. Okay, so investors and future investors, in order for you to make consistent income using the PMCC, you need to first of all go ahead and purchase a LEAPS option in your portfolio. What that's going to do is that it's going to allow you to control 100 shares of the stock. Once you're now able to control 100 shares of the stock, you're going to go ahead and sell monthly covered call against your LEAPS option. And that is going to allow you to make consistent income. The reason why this works out perfectly for small account portfolios is that the barrier to entry is way lower than if you actually had to buy 100 shares at the cost price. Remember, if you were to buy 100 shares right now, it would cost you $27,900. By buying a LEAPS option, you're only going to pay $3,940. There's a big difference right there. Now, that's all good and well. You guys learned how to do LEAPS option today. You guys learned the trick that I used before going ahead and purchase a LEAPS option, and you guys saw what criteria I use in order to choose my strike price and how I'm allowed to make consistent income with this option strategy. But here's the most important thing. By purchasing a LEAPS option in your portfolio, your main goal is not making consistent income. Consistent income is just addition to your initial intention. Your initial intention is buying a LEAPS option is that you buy a LEAPS option on a stock that's down. Make sure it's a good stock. The fundamentals are sound. Once that occurs and the stock has a pullback, then you could go ahead and purchase a LEAPS option. The point of buying a LEAPS option is actually a bullish option strategy. So you're of the mindset that whatever price you buy the LEAPS option, let's say you bought it when the share price was $2.79 per share, you're of the mindset that before your expiration date a year from now, this share price would have increased in price significantly. Now, exit strategy. Exit strategy. You need to decide what percentage of gains you want to first get before you actually go ahead and close out this contract. For instance, if you were to do this option strategy right now and you able to buy at the share price at $2.79, your exit strategy should be to get out, let's say, at the $330 price. So whenever United Health hits $330, you're going to be very high up with your LEAPS option. So then it's time to close the trade. Now, that's just a mere example. Always remember to do what feels good to you and your portfolio. Now, remember, the main goal of a LEAPS option is to wait for the share price to appreciate in value. And that is how you make the majority of your money, not by selling consistent covered calls. So there you have it, investors and future investors. That is one trick that I use personally in my portfolio in order to make me near impossible to lose on my LEAPS option. I go ahead, I multiply my premium out by 12 months and make sure the premium I'm about to receive over the 12 months at least equals to or surpasses the amount I'm about to pay for the LEAPS options. Once this criteria materialize, then I'm going to go ahead and purchase the LEAPS option. Come expiration, if my LEAPS option expires worthless, then at least I would have been able to accumulate the same amount in options premium. So investors and future investors, those of you that made it to the end of the video, you guys have learned a new trick today that if you so wish to, you could go ahead and practice this with your portfolio. Now, you guys that made it to the end of the video, you guys are the real investors and future investors. Go ahead, like the video, subscribe to the channel. Make sure to hit the notification bell to get an alert when I post these videos. Now, here's the most important thing, right? I do create this free content and put it out there in order for me to help people with a regular 9 to 5 to start making income with options trading. So if you do know of someone that's struggling to grow a small account portfolio, well, the right thing to do is to go ahead and share this video with them. Let's try to help as many as we can start making income with options in order to supplement their regular 9 to 5, and eventually they should be able to leave their 9 to 5. So go ahead and share this video. Now, until the next video, keep pushing your investments.